The U.S. employment situation is as good as it's been since the peak of economic expansion in 2007. Wages are rising, inflation is dormant, and new orders at big businesses are surging. It's a Goldilocks economy. Let's start the list of good economic news emerging in the first week of October with the surge in new orders in the non-manufacturing sector. The Institute of Supply Management, a trade association for purchasing managers, has tracked manufacturing orders for decades. In 2008, ISM began reporting results of a new monthly survey of its members in the non-manufacturing segment of the economy, which accounts for about 86% of U.S. gross domestic product. A reading greater than 50 indicates that the economy is expanding, and a persistent sub-50 reading indicates an oncoming recession. At 57.1, a recession is nowhere in sight. Another good sign was news that 156,000 new jobs were created in September. Contrary to reports in the consumer press portraying an anemic jobs recovery, new job formation in the past 7 years has been typical of past economic expansions. Another sign of strength came from data on weekly unemployment claims. The unemployment rate is now well below the previous low in the last economic boom. Yet another fresh sign of economic strength, average hourly earnings continued to accelerate in September. The 2.6% growth in hourly earnings in the 12 months ended September 30th is much higher than the 2.1% compound annual growth rate averaged since the end of the Great Recession. Finally, adjusted for inflation, real average hourly earnings, Americans' real purchasing power, recently topped its all-time high. While the news is filled with talk of American workers not getting a pay hike in 15 years, it is simply fiction. Look at the surge. Despite all the good news on the economy for the week ended October 7, 2016, the stock market dropped. And despite all the good economic news emerging lately, it's wise to be mindful that stock prices are near an all-time high. Stocks are fairly valued by historical standards, neither cheap nor expensive, and an emotional shift in sentiment or an unexpected event could cause a pullback at any time. With fresh evidence of strength in jobs, new orders and earnings, and inflation not a threat, the economy is not too hot or too cold. It's just right. For now, it's a Goldilocks economy.